Okay, Damon, are we ready to go?
Yep.
Good morning, ladies and gentlemen, and thank you for attending this webinar. My name's Tino Guglielmo, and I'm Managing Director of Bass Oil, have been for a while. We had a webinar here some time ago, and it's timely to update you all on the goings-on at Bass and the exciting projects we have lined up for our future growth. Damon, if we can just move to the first slide, please. Okay. For those of you that don't know, Bass Oil, an ASX listed energy company, we're profitable, and we're over the last couple of years, we've positioned the company to move forward with some significant growth initiatives, which I'll describe to you today. The company's platform is built on profitable oil production out of the Cooper Basin, the interests of which we acquired about 18 months ago, and the Indonesian oil production operations as well. Both of those operations are providing free cash flow and are profitable. And the market cap of the company is currently sitting around $20 million, and our reserves base of around 800,000 barrels 2P reserves. They essentially are the value of the company. So our growth initiatives, which I'll describe to you today, will provide a kicker on the growth. The company is debt-free, it's profitable, and as I mentioned to you, we are committed to creating value. We've positioned ourselves in the Cooper Basin particularly. The board and the management have a significant amount of experience in the Cooper Basin. Myself with Stewart Petroleum and Ambassador Oil and Gas. Our chairman, Hector Gordon, has been a senior executive with Beach Energy in the past, and most recently with Cooper Energy. And another one of our directors, Mark Lind, has been a long-term advisor in the past to Beach Energy, and with Hector and the rest of the team at Beach, oversaw a pretty significant growth period for Beach with the Cooper Basin properties. I can summarise to you the last full year of operations. We have 2 cash-generating units, as I mentioned, in the Cooper Basin and in Indonesia, and the net production to us that generates full revenue. We're producing around about 200 or over 200 barrels of oil a day. And in the full year results that we announced recently, we announced record revenues of just over 10 million Australian dollars, and we recorded a 23% EBITDA margin. So it's a pretty decent business as it is, but clearly we're not here to manage a decent business, we're here to grow a business. Recently you would have seen that we have undertaken a placement. We've completed a placement of just over $1 million, and that placement was primarily due to Tier 1 institutional investor. I'm pleased to say that we were able to attract interest from a Tier 1 institutional investor, because that's the challenge for many small cap companies, is to actually demonstrate future potential and future growth potential. And that was the main reason that we undertook the raising. The placement is complete, and we've offered existing shareholders through a share purchase plan that has just opened access to purchase some additional shares at the same terms as the placement. These funds will be used towards our growth initiatives, and I'll detail them shortly. But the first and most significant initiative to be able to impact us in the scoreboard is to get us into the East Coast gas market, and that is the extended production test of the Kiwi gas discovery. I'll talk more about that in a moment, but that is focused at near to medium term additional cash flow and growth. Then the more longer term company making opportunity we have assessed as the deep coals in our 100% owned PL 182, and we'll tell you what we're doing there. On top of that, we will be doing a little bit of development drilling in Indonesia to supplement free cash flow, and we have some other high value oil development opportunities which will add to reserves and cash flow out of our Cooper Basin operations. Thanks, Damon. This is just a corporate snapshot here. You'll see we have a tight register. Directors and staff account for 10% of the issued capital of the company, along with some other institutional and corporate investors as well. We won't dwell on this slide. Let's just move over to the exciting part of the discussion. Kiwi number 1 was drilled in 2001. It was drilled by Stewart Petroleum when I was there. A little bit of history. It was drilled on 2D seismic. We were on a roll back then. We had made some significant oil discoveries at Acacia and Warrior, and we were looking at Kiwi as an oil prospect in the Jurassic. The Jurassic did not yield any oil, but we drilled into the Triassic and Permian sequence, and we discovered gas out of the Calamara, which is a Triassic sequence right on the Permian Triassic boundary. And on a drill stem test, it flowed nearly 10 million cubic feet a day unassisted, which is a very strong flow rate. Because it was drilled as an oil prospect, it was only and on 2D seismic, it was only determined at the time that it was subscale. It was too small. Plus, gas prices at the time were of the order of $3 to $4 a gigajoule, whereas gas pricing now, as all of you are probably too acutely aware, is well over $10 a gigajoule. And it is the most northerly well in the South Australian section of the Cooper Basin, most northerly gas discovery. In the intervening period from discovery to today, a previous operator shot a 3D seismic survey, and between their mapping and our detailed mapping, we've upgraded the resource. I'm pleased to say the mean resource here at the Kiwi discovery is over 5 BCF, and the upside resource could be over 10 BCF. And that's significant. And to give you an idea of what a BCF of gas is worth on a net present value basis, connected in the ground, it's worth of the order of $2 million to $3 million. Let's call it $2 million. So, for example, if we're to prove up that mean resource of 5 BCF, the Kiwi discovery alone adds $10 million of value to this company. And as I mentioned to you earlier, we have a market capitalization of $20 million today. So one project alone, which is already a discovered a gas discovery, can add 50% or more to the value of this company. The other thing that's pretty interesting about Kiwi, you can see from the diagram, hopefully it's large enough for you to see, otherwise it's available in other literature that we've made available on our website. A success at Kiwi, which is the deep red blob, if you want to call it that, on the map, you can see that will upgrade other leads that are on trend with Kiwi. So Kiwi can yield and upgrade other prospects on trend. So it's a pretty significant little test. The extended production test is due to start as soon as possible. You would have, some of you may have seen that over the January, February timeframe and actually March, the Cooper Basin has experienced a number of significant rain events. We are looking to re-establish road access to the Kiwi lease. As soon as we've done that, we expect to be able to get road access into Kiwi in early to mid-May. As soon as we've done that, we'll set the lease up for the rig, contract the rig and move it on as soon as possible. At this stage, we're not looking to be able to move on with the rig before late May, and it may slip into early June, but we are, I can assure you, we are going as hard as we can to get this test started, because success with this test will actually clear our path into the East Coast gas market, because we have already been fielding calls from large gas buyers offering us, offering to buy our gas at prices north of $10 a gigajoule. And that drives significant cash flow and value for the company. So we are working as hard as we can to start that test as soon as possible. What we're doing with the test will be around about 14 days of flow and somewhere between 28 days, maybe a little bit longer, of shut-in. We're looking to use that flow and shut-in data to more precisely tie down the size of the Kiwi gas discovery. At the time we tested in 2003, we were not able to get gas samples. We know roughly what the gas samples are, but there are liquids and some CO2, which we think will be around about 15 to 20% CO2. But we need to tie down the gas composition. Natural gas liquids are valuable in their own right, and we need to confirm the composition as well as the size of the field to complete the design of the connection into the Cooper Basin gas gathering system. This test and the interpretation of the results is all very short dated, so we will know very quickly whether we have a commercial discoveries, and if we call it a commercial discovery, we will be getting our skates on, commencing engineering and commercial discussions immediately to get this field online. As I mentioned to you, it is a very valuable asset that we own as Bass at 100%. Thanks, Dan. Now, the deep gas from the deep coals. This is a fascinating potential asset for a company like Bass. We own PL 182, which you can see the outline thereof on this map. The map there, for your information, is a net coal isopack, so it's a thickness of coal in a geological feature called the Patchawarra Trough. And the Patchawarra Trough runs for, we're talking somewhere between 50 and 75 kilometres in a northeast southwesterly direction. We are right next door to Santos, and it's a particularly good address. The deep coals in the Cooper Basin have been accepted as the source of almost all of the conventional oil and gas in the basin that's been produced to date. And we're talking about 6 TCF of gas and 300 million barrels of oil has been produced out of the Cooper Basin to date. All of those hydrocarbons have come out of the coal. And the coal themselves have never contained significant hydrocarbons in their own right as a source. It's a little bit like the shale revolution that took over the US from around about 2006 until today. The shales in the US are carbonaceous shales, and obviously coal is heavily carbonaceous. And in the US, they're the source of a lot of hydrocarbons, and obviously the coals, as I've described here, are a significant source of hydrocarbons. To give you an idea of scale of the coal, in our area alone that you can see in that map, the prospective resource of hydrocarbons in place in that small area alone is 20 TCF. Of course, the recovery factor is a lot less than that. But one of the prospects that we've been able to delineate in a study that we carried out about 12 months ago is the Moulion East project, which you see on that banner. That has nearly a TCF of recoverable gas potential just in that prospect alone. So we know that Santos has been looking for a number of years to exploit the coal, and they are producing gas out of coals in the conventional gas wells that they've been drilling in the past. And they've been looking for a while to commercialise the deep coals, most recently at Beanbush. And the reason that Santos is doing that is because the potential gas to be recovered out of the deep coals in the Cooper Basin is at least as much as has already been produced in the Cooper Basin. So it's a very significant resource that could lead to the renaissance of the Cooper Basin. And for a small company like ours, it's actually a potentially company-making opportunity. We've recently engaged a global oilfield service company, Global Specialists, SLB. They recently changed their name from Schlumberger. You will likely know them as Schlumberger. We've recently engaged them to perform 2 studies for us. One is a geomechanical study, the results of which is expected not long after the middle of the year. And the geomechanical study will build a geomechanical model of the area that we're in. And the reason a geomechanical model is very important is, as some of you would know, there is the issue of being able to successfully place either a directional well or a horizontal well at or near the coals or through the coals. And it's very important to know the stress orientation and magnitude of these coals to be able to place them in deviated wells that are likely to be required to place them in the right orientation to intersect as many fractures as you can. This modelling work is we're using Schlumberger's proprietary geomechanical capability, and we are using all of the latest available data, including the Beanbush 3 horizontal well, the data of which has become open file and caused some significant pain to Santos when they were drilling it. We have that data available to us, so we will be able to benefit from modelling calibrating the model with that well and others, so that we can determine what the most optimum way of designing a well to exploit these resources might be. And then there is also a sweet spot identification study, which they call rapid resource assessment, that will be going on concurrently as well. So this is a very, very significant growth project for the company. If we're successful, and we're looking forward to reporting progress as we move through. Thanks, Dan. So in terms of liquidity events or milestones, if you want to call them that, the mobilisation to the Kiwi well side of the workover rig, we're looking to do that as soon as possible. It'll either be towards the end of May or early June, but it is as soon as possible, as soon as we can get in there. And as I mentioned to you, the completion of this reasonably short duration test and the analysis of the results will be available shortly thereafter. And in terms of the deep coal study, we have commenced the deep coal study, the geomechanics portion now, and the results from the geomechanics study will be available mid-year, and the results from the sweet spot analysis element of the study will be available later this year. In summary, ladies and gentlemen, before I hand over to any questions that you may have, the board and management of Bass has a strong track record of creating value from Cooper Basin assets, and we're looking forward to doing it again. We see that we have a portfolio that is capable of growing this company into multiples of where it is today. And we're looking forward to doing it again for all our supportive shareholder base. So thank you for your attention. I'm happy, we've got a few minutes available, and I'm happy to take some questions if there are any.
There was one question that came through, Tino, from Will. What would be the approximate pipeline costs for both gas projects?
The pipeline costs for the Kiwi Gas project would be of the order of $5 to $10 million. And when we talk about the net present value of 5 BCF for Kiwi, the net present value, we burdened the project with that pipeline. In terms of the coals, there are pipelines that actually traverse right through PL 182, so pipeline infrastructure is not the issue for future gas production from deep coals. Although gas production from deep coals from pilot wells may occur in the nearer term, the full field development of the coals would be a more medium to long term proposition.
That was the only question thus far.
Okay, very good. You've got me, I'm a captive here at the moment, so please don't be shy. If you have any other questions, I'm more than happy to take them. Otherwise, I'd have to torture you with some more stories about how much we love the Cooper Basin.
James, yes, you can ask a question in the meeting chat. James's question was, what are your thoughts on the Indonesia oil drill coming up?
Oh, it's Thank you, James. Indonesia on the near term has some pretty significant reserves growth potential. We believe, as you would have seen from the annual report we just released and the maps that we put out from time to time in Indonesia, we believe that the field extends west in a westerly direction. The Bunyan 6 well is being drilled southwest and adjacent to our biggest producer. That is we believe, a very low risk well. I would ascribe somewhere between 85 and 95% chance of success. The well next door is the best well in the field and it's produced 1 million barrels of oil. Importantly, that will increase our production, of course, and our cash flow from Indonesia, but that will inform the geologic model heading to the west. We'll be drilling in 2025 a near field well to the west of Bunyan 6, and unimaginatively we're calling it Bunyan West. If Bunyan West comes in, that will double our reserves in Indonesia. Indonesian oil reserves and production in the next 18 months with success will grow significantly and grow the value of the company again. Thanks, James.
James is just typing early questions. 1 second. Okay, follow-up question from James. The oil prospects in the Cooper, are farming partners interested in looking into this soon?
Yeah, James, good question. In this pack, and again, it's in the annual report. Actually, Damon, can you just head down to the Tyrrell slide, please? I think it's about 2 or 3 slides further forward. Keep going. There we go. The Tyrrell prospect is very interesting. It looks like it has a prospective resource of over 2 million barrels. We're just doing the evaluation of it now, and then we'll be offering, and again, this is a property we own 100%. We'll be offering Tyrrell to other players to farm in. It is very close to Warrior, so it would just plug into our Warrior base of operations. If Tyrrell is successful, then you can see to the southwest of Tyrrell, it brings Flint into play. The 3D seismic that we've been using, and again, this was in the Stewart Petroleum portfolio, we drilled a well to the northeast of Tyrrell that had significant oil shows, but wasn't a discovery. The advent of 3D seismic, we've been able to understand why Torrific East, in fact, as it was called, was not successful, and why we believe Tyrrell has a higher chance of being an oil discovery. That in itself is actually, I'm not making a big song and dance of it, but it's actually useful with James's question to let people know that the Cooper Basin has, in an area of significant infrastructure, some really high value oil opportunity. For example, the net present value of oil discovered at Tyrrell at these oil prices is somewhere between $25 and $30 a barrel in the ground. We're talking significant amount of value from discoveries here too. So thank you for the question, James. I was able to at least say that. And yes, we believe that there will be partners that will be interested in this prospect. If there isn't, we can choose to drill this ourselves, if you will, because these are shallow wells and low cost wells. It wouldn't be unusual for a company to be drilling a well like this 100%, but in a risk mitigation context, we would probably be looking for some kind of carry from a partner in an interesting prospect like this. So our options are open because we own 100%. You are most welcome, James.
got one question from Ian as well. What do you expect the dividend price to float to once the East Coast market is online?
Can you repeat that?
What do you expect the dividend price to float to once the East Coast market is online?
Am I interpreting that as a...
I think it's price. My interpretation is share price.
Yeah. The share price. Pretty significant. The value of, as I mentioned to you, just in a straight mathematical basis, if this thing comes online and we prove it up to being 5 BCF, it would be on today's money, it would be an additional 4-5 cents a share as a minimum. The cash flow that we would be garnering from bringing this prospect online would be very significant. We'd be talking about $5 to $10 million of additional cash flow for a period of time. $5 million of cash flow. I think I did these numbers the other day. $5 million of additional cash flow per year for 10 years. So it's a lot of money, and we are making that's revenue. We're making $10 a year, $10 million a year of revenue at the moment. So I'd be disappointed if we didn't increment our share price by at least 50%.
Okay, that's it. I think we've hit time as well.
Okay, fantastic. Look, thank you very much for joining us. Again, for those of you that are shareholders, we're looking forward to for a reward for successful efforts for all of us here, and those of you that are considering becoming a shareholder. Well, anything we can do, anything questions that we can answer for you to help you make that decision, we're only too happy to address them. Thanks again, and you have a great day.